Hi guys, hi from Longer, trading stop. I know we already discussed about that, but I was, this is the Automatic Trading Magazine, which is so far only Italian, but we are thinking about the English version. And in this, I was reading the article of Andrea Leviolo, this guy here, and he was talking about the correct employment of trading stop in trading systems. And I like these articles because they are all analysis based on numbers. Being an algo trader, I obviously base all my decisions on number. And in this article, Andrea, same name as me, same business as me, same trading approach. So obviously I agree with what he writes, same experience, because it is what makes us think a thing is good or bad. He's explaining the pros and cons of a trailing stop and all the dangers in the built-in software rules or functions. And so who has seen the other video where I talk about the trailing stop knows that I'm not a big fan of trailing stops. But just to tell you another thing, in another video I was saying that I don't trade systematically cryptocurrencies. I just put live two systems on Bitcoin future. I developed these systems a while ago. I kept them in incubation, live incubation, with no real money. And I saw that they are performing well, so I decided to put them live. But looking at the performance, I noticed that these systems were able to capture some of the major trends that the market showed. And you know, there had been interesting trends. But in the retracement phases or the opposite direction trends, they were suffering deep drawdowns, giving back a lot of the money that they accumulated. Psychologically, I prefer not to make the money rather than giving it back. So if, for example, I have a trade that goes up to 100 and then goes down to 80 and I exit, that 20 given back from the virtual open position gain to the final gain makes me suffer more than if I had a take profit at 80 and after exiting, seeing the market go up to 100. I mean, this is my personal mindset, but I believe it's common with most of you. But let me know, it will be interesting to discuss. That said, in any case, let's go back. This system had these nasty drawdowns in the phases where my trades were giving back some money. So I was wondering about using a trailing stop, and I tested it. It's the same model, two systems, but it's one system with two different sets of inputs, so it's very similar. In both, I inserted a trailing stop, and I found out, with my moderate astonishment and satisfaction, that the employment of a trailing stop in this system helped very much. First of all, in reducing, really cutting down the drawdowns, and also, this is what gave me more reasons to be astonished, in increasing a little bit the net profit. So I was not giving back part of the net profit, getting a better drawdown, but I got a better drawdown and I even saved my net profit, which was obviously a very nice surprise. So thinking about this, I was thinking back of when the first systematic trading approach came out, in the 80s maybe or so, and the fact that they were coming along with the trading stop concept idea, okay, which was one of the exit rules. So if we think back at those markets in the 80s, and we compare them to the Bitcoin today, they were similar. I mean, obviously, the bubble of Bitcoin was pretty much more explosive, but the general behavior of these strong trends and deep retracements, and then again, is very similar. And so it was obvious that in those markets, there was the suggestion of a necessity to use a trading stop to protect open profits. While today, the same markets which were moving that way in the past have a very choppier behavior. So it's much more difficult to get the same benefit of using a trading stop because you're using it on narrower time frames, narrower time horizons. So everything changed, and the goodness of the trading stop those days is most gone. If we look at today's standard markets, DAX future, mini S&P, crude oil, hardly you find a good way to use a trading stop, and you find always that the standard exits such as time exit, stop loss and take profit are still those who make the system work, and the addition of a trading stop most often doesn't give any benefit, not even psychologically reducing drawdowns. So you don't get what you are looking for, what you were getting in the past, and what you can get if you trade these modern, fast and furious markets such as Bitcoin or cryptocurrencies. I trade this system on Bitcoin because I can trade the future on Bitcoin, so I developed on the futures. So this is actually, that explains why I'm not a fan of trading stop today, because narrowing down the time frame of employment leads to a much lower or to no benefit, and also has the danger of having the mistakes in the software, the bugs in the software to properly calculate the impact of a trading stop. This is something that I probably discussed long ago in my previous video about trading stop. You can find it here on the channel anyway. And the reason why I use a trading stop on Bitcoin, because it helped in, let's say, getting my system protecting profits in such a volatile market. So I'm still not a fan of trailing stop, but I accept to use trailing stop where I see a benefit. So I'm not stubborn. I test numbers, put them together. If I like the numbers, I use what I found. If I don't like them, or if I think there is something false due to a bug, I just put them away. Test, always test. That's it. I hope it helped, and let me know about your experience with trailing stop. Now, don't come and show me this marvelous system with 45-degree equity line, because I don't believe me. Tell me your real experience with real money and using or not using trailing stop. And if you put your money to work with systems, I believe you have the same conclusions I have, that trailing stop is not the ultimate help for the systematic trader. Ciao from Andrea Unger. See you next time. Ciao. Enjoyed it? Click the link below and you will be noticed as soon as new material is available.